a lot of questions about the future of Daily Journal. And I think this comes up every year, but I'm going to ask you anyway, because it comes up every year. What do you think about the equity portfolio? And one, the investment in Alibaba recently. And two, what happens when Munger is no longer around to run the equity portfolio?
All terrific questions. So Charlie Munger is, somebody will correct me, I think he's 98. He'll turn 99, I guess, in January. So, I sometimes mention this, I have this actuarial table behind me that shows that a 99-year-old, a healthy 99-year-old has like 3 years to live. And then a healthy 102-year-old has, 2 years to live. So Charlie might be around for a while. He's stuck around for a long time, but Charlie's not really managing the business or the portfolio. I mean, he's thought about this. So I'm not worried at all about what happens when Charlie's gone, but we want him to be around as long as possible, obviously. He is managing the portfolio, but it's the BABA position you mentioned is one of the first changes, and there's a foreign change, but these are the first changes in, maybe 6-7 years, maybe longer. This is not an actively managed portfolio. It's managed like our infinite compounders. So he is buying, and by the way, he states quite often that this is just a cash alternative. And the reason that he's calling it this is partly for legal purposes, so they don't have to register the financial firm, but also because they're using it like a piggy bank. They have a margin. Munger doesn't mind having a margin loan with a 2.7% interest rate in a 8% inflationary environment. The margin's a negative cost to the firm. Okay, so they borrow, if they need any cash, they borrow against the securities rather than liquidating the securities. So this might be a permanent portfolio that they keep for decades and just borrow from as they need capital at a very low margin rate. So that there's a lot. I mean, this, by the way, if Charlie Munger were running a fund today, I think most people on this call would think it was a great privilege to invest in that fund. And here's a situation where Munger's literally managing, basically a fund, and there's no fees or anything whatsoever. So, whether we have Charlie for 25 more years or 2 more years, we're totally happy that we get access to this, his decision-making in this fund. What do I think about Baba? I think Baba is a terrific business, and it's going to become one of the global leaders. I mean, there's a few tech companies in America, Baba, Tencent, a few of these companies in China, they're going to own cloud. There's so much that's happening within Baba. What I found most fascinating about Baba is when Munger went in and did this tax loss harvesting plan. I guess it was probably Q1 or so, and maybe I'll explain it in a second. But so Baba had fallen a lot in price from when Berkshire started buying, or Daily Journal started buying. I think they started paying maybe $200 per share. Sorry, it's all right here. Why don't I just go to the slide? Okay. So Baba, they started paying something like I think under $200 a share, and then it fell to basically 90 because of all, there's risks in China and things. And so, and Charlie will tell you that he has no concerns about the Chinese government. He says it in the Daily Journal meeting. You can all look it up. He talks about it quite a bit. He has no concerns over long term with this holding. When the shares fell to 90, there's something called tax selling, where people will sell, and then to avoid the wash rule, they will be out of a position for 31 days. and then they will come back into the same holding. They will capture the short-term loss on their taxes, and then they will now have a new cost basis for this potentially forever holding that Munger has put into the portfolio. So in doing this, so many people ask me, and my theory turned out to be correct. Basically, he instead of selling first, his math and thesis went like this: there is so much upside and such a muted downside that he did not want to risk being out of the position for 31 days, because if he was out while it rallied, he would never be able to get the same share count back. What he actually wants are these 300,000 shares. He wants to own these 300,000 shares. So in order to get the tax loss harvesting done completed, he actually bought first, waited for 31 days, holding both positions because the probabilistic outcome is that they go up. And then he liquidated the original holding, capturing the remaining tax loss harvesting, and maintained his existing 300,000 shares. And it caused such a huge amount of confusion, particularly on Twitter. It was like nobody could figure out why he was buying in one quarter and then selling the exact same amount in the next quarter. But hopefully that clears it up. That's exactly what he did. That's exactly what he was doing. He was just basically capturing a tax loss to offset the revenues from Daily Journal. So he's, as you all know, very bright.
Amazing. I'm so glad you went through that. For the company itself, away from the portfolio, we got a number of questions about Tyler Technologies and the competition there. How do you look at Tyler Technologies? How do you feel about employee reviews of Daily Journal? Bradley James Hope says he lives locally and is happy to go conduct due diligence on Tyler if you need. So
great.
You can follow up with him later. What do you think about the horizon of competition coming into Daily Journal?
So Tyler is offering the same services, but they're the 800-pound gorilla. And so Tyler is probably going to do very well also. I think Daily Journal has a lot more potential because it's selling for below liquidation value and nobody even knows that they're doing this, and it's working. They're going to be the competitor to Tyler. So this is likely to become a natural duopoly or maybe oligopoly, but this space is enormous. There's most courts, apart from them being very behind in their technological capability, most court systems their IT is managed by a handful of local staff. And so they might be putting some sort of tool in place that would allow them to operate and operate remotely, but they're not going to be able to compete against Daily Journal in the long run or Tyler in the long run. So naturally, Tyler and Daily Journal are just going to be accumulating customers for decades. There's 3,300 counties in America, something right around that number. And they can win a contract all over the place. Right now, we've seen 100 of them. Charlie Munger has talked about Tyler, and he's actually made the comment that he wishes that all of his competition was like Tyler. So we've sort of put a lot of things out there about Tyler, but I think Tyler's going to do very well. The stock price has actually done better than Daily Journal, but they're selling for 15 times revenue right now, and you know, this is just totally undervalued. But you know, I don't think Tyler necessarily needs to lose to Daily Journal. They're both going to become the major players in this space.